Not for the pitch session. Great to know about PalmSwap. All right, thank you so much for being here, everyone. We're now going to have a very interesting panel discussion. The topic is going to be the new creator economy. Andrea, if we could please have you on the stage. Hello.
Hi, everyone. How are you? Wow, this is a lot louder than yesterday. So I'm very excited to be here today. We've been here with our friends at TDeFi for several days, meeting so many exciting groups and companies and people. So it's particularly special for me to be on the stage with two people who are very close and dear to my heart and part of the Faith Tribe family. My name is Andrea Abrams. I am the Chief of Strategy at Faith Tribe. And today we're going to be talking about ecosystems and the transition from Web 2 to Web 3 for the new creator economy. I'm also the founder of FigiCode, which is an organization of industry leaders working on a phygital approach to the metaverse. And so a lot of what we talk about this day in the creative economy and the ecosystem of Faith Tribe is how to really create a platform that is an ecosystem builder that's going to take the creators, fashion, artists, musicians from a Web 2 interaction to a Web 3 on-chain activity. So joining me here today are two people who know a lot about on-chain, but came from a world of off-chain activities. To my right, I have Mark Cachia, founder of Scytale Ventures, a fund that invests on blockchain and Web 3 companies. And I have Mike Charalambous, founder of Threedium, an end-to-end platform and ecosystem for all things 3D. So I'd like to start by asking you guys, and we're missing Leila Hurstel, who is in terrible traffic. So if she arrives late, maybe she can come and tell us a little bit about Versus State, as we're all building different components of a Web 2 into Web 3 ecosystem. So I'd like to give you guys a chance to tell our audience today a little bit more about what you do and why ecosystems are very important in adoption of Web 3.
Two, one, two. Hi everyone. It's great to be here. Thanks for having us on the stage. I think a quick intro to Threedium. I'm one of the co-founders, the CEO. Threedium is a end-to-end ecosystem that allows any brand, any agency, any individual creator to be able to digitalize their products at scale and build immersive e-commerce solutions, which they can then distribute across physical, digital, and most recently within metaverse channels. We work with many brands within fashion, luxury, automotive, consumer electronics, and FMCG, such as LVMH, Porsche, Farfetch, Asics, New Balance, and the list goes on and on and on. So pleasure to be here and share my 50p of advice.
Thanks, Andrea. Thanks, Mike. So we look like a venture capital investor from the outside, but what I think we really do, to build on what Andrea said about ecosystems, is that we seek to team up with partners. And one of the things we provide is capital, but we also work very diligently to try to build up businesses and partnerships. So one of the things that we have as our philosophy is that we look for different companies, applications, protocols that don't compete head to head with each other, because then we'll have a conflict of interest to see, who are we going to support. So it's not really, okay, we're just going to spray it around, then survival of the fittest, because that will block our ability to really work with different teams effectively and build the mutual trust that's necessary to really, grow a business and a relationship.
Faith Drive, we talk about the fact that we are not quite at Web3 for the creator economy, right? So a lot of what happens in content creation, fashion, entertainment, it's really what I call Web 2.5, because a lot of the community from all of the creators is already very honed into Web 2. And so jumping straight to Web 3 is very scary for our community. So when I look at what we're building, we're going from an ecosystem that's very comfortable to designers, artists, makers of all things fashion and lifestyle, and slowly merging that process into Web3 and the DAO, where they actually get comfortable with on-chain activities, rather than saying we're going from A to Z without explanation. Because it is my belief and the belief of Faith Drive that it's really all about the community and the access and the ability to use the technology to enhance what we're building. Mark, you see a lot of companies that are doing different things, but in the same process as ours. Obviously, Mike, you're working with amazing brands that are living everything I'm describing. So, in your own words, what is the most significant difference between Web 2 and Web 3 and the value of on chain transactions that will really define that disruptive transition to Web 3 as a whole?
So I'll take it. So Web 2 to Web 3. So in my view, Web 3 is an ideal that hasn't reached critical mass yet. It's well on the way, but it's not there. So the idea of different sovereign entities operating completely independently of physical jurisdictions, that's the direction that we're going, but we're not there yet. And our brains work very well understanding existing systems, how they work. We see how, Web 2 was already, we had to change our minds around to really see that, what's a Web 2 business versus a brick and mortar business. And a lot of people didn't get it. I'm of a certain age, so I can remember very well the late 90s and a promise of the internet is going to be this thing and stuff is going to happen. And people really didn't get it. And I certainly didn't get it. I remember Amazon as probably one of the only really successful earlier internet stage companies as a bookstore. Okay, great, but I don't, I like to read, but I don't buy that many books. But it wasn't that. It was much more than that. And then, with YouTube, there wasn't the infrastructure yet because there were 2 or 3 companies doing exactly what YouTube does, but they couldn't grow, they couldn't scale because streaming video just doesn't work on dial-up internet. And I think we'll be seeing many of the same types of phenomena happening now, where there's these ideas of something should be great, like a blockchain protocol. And what does that mean for real business and real commerce besides trading? It's not there yet. It's definitely coming. But we still need a lot of building blocks in place. So, Andrea, you mentioned a DAO before. And DAOs are a thing. And DAOs have been around for a very long time. But, since, the DAO happened, when was that? In like 2016, I think. But then only one letter is authentic, right? So the D is decentralized. Are any DAOs really decentralized now? I don't know. Are they autonomous? Well, what does that mean? Does that mean that people don't run them? Well, they're not autonomous either. But they are organizations, but they don't have any framework. So we need a framework to understand what is a DAO, how can it interact, and we're working with teams doing that, but it's not there yet. So not really to dodge the question of what is Web3. We're on the way to Web3, but a lot of the important building blocks are just in production now.
I did meet a guy that told me that he's a CEO at a DAO. I was like, okay, that kind of defies the purpose. But yeah, I think your definition of the differentiation between Web 3 and Web 2 is spectacular, so I'm not going to try and add anything on that. I'm just going to give my perception from a commerce perspective. And from a commerce perspective, what differentiates Web3 to Web2 is this new shift in consumer behaviors. Because in a world powered by blockchain, we're now able to place the same value on digital assets as we place on physical assets. So we finally see this creation of digitals, and we finally see people willing to spend $1, $100, $1,000 on something they can tangibly enjoy, the same way that they will do it with something that they can actually physically buy. And this gives a tremendous opportunity for the formation of a dual economy, where brands can now start selling directly to avatars, and directly to consumers. And the opportunities are just phenomenal. And this is what we're here doing, trying to explore and scale this kind of infrastructure of a dual economy for the brands.
I love that you said that, because I think my partner, Wahid Chamas, who's in the back, was laughing. When I joined Faith Tribe, I said we need to change the titles, because the CEO of a DAO is an oxymoron. And so we talk about this a lot in our company. For us, it's all about community. So we were created by a fashion brand that was not really following a traditional pyramid. Our creative director is not the final word. He is just a curator. And it's a combination of artists in the fashion industry, but also physical artists, musicians that all come together. So we would go to a party and create a one-of-one jacket where a famous artist would paint using a jacket as a canvas. And so we were talking about one-of-one items before NFTs. So naturally, when Web3 became the cool activity for every fashion brand, everybody wanted to know about the tools for Web3. And there's been a lot of confusion. What is Web3? What is metaverse? What's an NFT? Those are the questions we get asked all the time. So I always say we need to start with the education. As we go into Web3, one thing you guys both said is DAOs, the decentralization of access, the peer-to-peer validation and community. It's clearly a very important concept for the artistic community. Give me your prediction. How long will it take? And I think all three of us, we have been through Web 1 and Web 2. How long until it's truly decentralized, and what will it take for it to be really decentralized and really on-chain activities for all creative activities, if you think that's the way we're headed?
So what do you mean by it?
Well, at what point do you think that we're going to be no longer talking about Web 2 social interactions for creative communities, for fashion, for live, for streaming, for lifestyle activities like concerts?
My view is these things take a really long time, and way longer than you expect them to take, and then it happens really fast. And I think this is not going to be any different. So right now, externally, it looks like progress is really slow. But we know that there are teams working very hard, building very legitimate businesses and platforms that are just rolling out. So if I had to say an amount of time, it's really hard to say, because one of the more interesting things about tech is that the pace, the delta of advancement keeps accelerating, and Moore's law, and that applies here as well. So I'm dodging as to when, but it's going to feel like it takes a really long time until it happens all at once.
But you, Mike, you're working with brands that quietly are migrating all of their selling product to 3D representations on-chain. How much of it will really be on-chain and not just be better tools for what we would think is Web 1 or Web 2?
Yeah, I think it's a great answer with so many different great question with so many different answers. But what we've seen is that right a year ago, we were seeing all these kind of companies and amazing entrepreneurs doing amazing Web3 tools, and they were building the future. And now we see all these Web3 tools coming back into Web2, so they're not building back a bridge into Web2. And the problem is that they were so good but so futuristic that none of the brands understood it, and also there's no real demand about those kind of protocols still. But what the brands are seeing now is that everything that they want to do, if they want to be future proof, they have to go after the Gen Zs, and they have to go after more sustainable, more cost efficient supply chains that will allow them to exist and be able to navigate through all these discrepancies when it comes to cost, through inflations, wars, pandemics. So the brands are trying to find ways, like using like 3D technology, to be able to build 3D content factories that allow them to become more agile when it comes to designing, manufacturing the products, distributing them for prototyping and sampling. Then instead of shipping like tons of very heavy inventory across their different flagship stores around the world, they just create 3D configurators where people can go configure the products and personalize and pay, and then the brands deliver on an ad hoc basis. So these kind of things are things that allow the brands to slowly but very, clearly adapt into a rapid digital transformation process that gives them clear ROIs. And it's easy for them to then start building use cases that then allows them to go back, unlock budgets, and get more people interested into the process. And then, as Mark said, these things tend to grow as wildfire once they have a solid proof. And that's where you use this kind of 3D content factories and very obvious digital transformation perspectives to build on a much more futuristic Web3 future.
Wow, that's refreshing, because if you look at retail today, a lot of the brands, it seems like, Enrico, my other partner, is laughing. If you come from the fashion industry like we do, it can be really scary to see all the product and digital, or the avatar economy, where the future we are embarking on is truly phygital, and the real key is the connection of the two. We're still gonna like our physical garments. So on that, everybody says that 2021 was the year of the NFT. 2022 was the year of the DAO, albeit I agree, maybe not truly decentralized. What do you think is going to define 2023? Your prediction?
I think it's going to be three elements. Sustainability, because everything we do, no matter which brand, no matter which industry, it's all about becoming more sustainable. That's what consumers want to see. It's going to be digital engagement. The brands are going to try to find ways to become ever more desirable, ever more interactive through digital channels. And I would say also it's basically digital transformation. We're going to be seeing a lot of more brands investing in innovation managers, in innovative infrastructures that will allow them to go from point A to point B with as less, manual infrastructure possible. And I think to put all this together, I would label them as probably an interoperable infrastructure, as you like to say a lot. So the brands are going to be looking to find ways to become more agile across all their touch points.
Well, I'm optimistic. So I think 2023 will be a cold and brutal winter for blockchain. And why is that? Why is that optimistic? It's a good thing, because there's so much unsustainable businesses, so many unsustainable activity that was kind of just circular economies, not creating real value, and they're going to break. A lot of them are broken already, and when they go away completely, the world will be a better place for building really useful businesses and ecosystems on the blockchain.
So both of you touched on interoperability, my famous word, because I like to say that you can't have content on YouTube with a dial-up connection. And it feels like right now some of the projects in the fashion industry are the equivalent of you trying to use YouTube content on a dial-up. You see a lot of projects, Mark, from Scytale. You deal with a lot of projects, creating the digital components. What will it take to reach interoperability, particularly in our industry, retail, fashion, lifestyle ecosystems?
Um, it's a great question that I don't really know the answer, because we also build together with the brands, and every 6 months we're just discovering something new that we didn't know it existed before. And going back to Mark's words, it's Moore's law, so things keep progressing quite fast, and then we know we can use them. But I think the most important aspect is basically being able to have one asset that you can utilize across all your different functionalities. So for instance, with our 3D technology, we have the brands that they come in, they design the 3D garment without having to physically sew it, without having to physically source in any textures, any materials. They then use that to take it to their prototyping and sampling teams so that they can design, even new textures and materials that they haven't invented yet, to see how they look on that garment. Then once they have those things lined up in their libraries and in their asset management systems, they then use them to go and populate their e-commerce shops and start selling products even before they produce them. They start generating revenue from those products, and then they use that money to fund the actual manufacturing of the collection. And then at the same time, they're using blockchain to try and test how they can authenticate these products before they've been even live on the market. So we're seeing the brands trying to find elements that they can use as key pillars to an agile end-to-end workflow.
So interoperability is a loaded word. On one side, there's interoperability on just the blockchain side. And will the Bitcoin blockchain operate with other blockchains? How will they communicate with each other? And then if you want to, and so I think blockchain interoperability is very close. A lot of bridges have been exploited, but that technology keeps improving. And arguably the best technology out there is cross-chain message passing, which is a feature of the Polkadot ecosystem, which we happen to know very well. But interoperability between humans and businesses and blockchain still has a way to go. We still need user-friendly interfaces, and we're not quite there yet. But it's being built, and I think that will come late next year, early the following year, from what we see being developed.
So I don't mean to put you on the spot, but you both see a lot of cool things, and we share a lot of the same views. So tell me, give me some positive news in this market. What do you see today? Give me a project or a new technology that you're excited about. You can do more than one.
Well, I mean, I'm going to come from a brand perspective because we deal with a lot of brands. And it's phenomenal to see brands finally breaking all their protocols of being very traditional and finally trying to do things more digitally, even within gaming. And what we're seeing, and we find it very, very interesting, is this bridge between traditional commerce and gaming commerce. Seeing brands, even recently like Rimowa, that announced that they're going to partner with Artifact to launch a digital-only collection. Mind-blowing, right? But imagine the revenue potential that it generates for Rimowa and all these 15 and 14-year-old people that they're into gaming, but they've never heard Rimowa before. Now they're going to love Rimowa. These are things that are very, very interesting, and you see like a shift of paradigm where you see brands that are very, very old school now becoming more degenerate, and I think that's very, very exciting.
Well, I'm really lucky because I get to see a lot of cool stuff. So if I had to pick one, it's really, really hard. But one thing that I like that, full disclosure, we're not invested yet, is Faith Tribe and what's happening there. And just the idea that you could, even as a person, design something yourself. Or maybe you're not going to sell it to a lot of people. Or as a person, get really exclusive fashion that you can have the physical as well as the digital, I think is super interesting. And it's not that easy to pull off. And kudos to you for taking it as far as you have so far. But I think that's really cool. Something that I could see very easily scaling, in a very big way.
Well, thank you. And I never gave you my word, but my word for 2022 is access. Because I think this is the first time that we've had the tools to provide access to our community. So to your point, Wahid and I go around the world presenting our project. And the one part that's fascinating is seeing designers, digital designers, fashion designers, artists who say to me, we know that you and Maria Bucciolati, who created our Faith Connection ecosystem of collaboration in the physical world, had access to all of that in the real world. But how few people could go to that store party and be part of that? We are taking the party globally in our ecosystem. So our Web2 ecosystem is really a connector. We are expanding. We are already launching our beta phase with a tremendous number of collaborations. But when you think about the opportunity of somebody anywhere in the world using the tools to digitally collaborate with a famous designer in another part of the world, that's where you really talk about decentralization, even if it's not fully autonomous. Okay, so as we finish, I'd like to give you guys, everybody should know, full disclosure, these are two of my favorite people in the space, and we spend a lot of time talking about very interesting things that sometimes I said, we can sell ourselves our own dreams, right? Parting words for everybody listening. You've been in the space a long time, advancing a lot of the technology and investing and vetting some of the best projects. What would you like people to know that maybe it's not out there in the news today, or that it's not getting the attention, but it's very exciting about our industry?
I would say, there's a lot of things that externally look scary, right? Blockchain prices or asset token prices are very volatile. They've been up a lot more than they are now. They may go down more. But this movement is inevitable. I mean, it's happening, it's going to happen, and it's going to scale. It's just a natural effect of the information age and what information wants to do. Become widespread, become decentralized. And, as scary as it may seem in a moment, market is down 5% in a day, is up, whatever, doesn't matter. Real things of value are happening here.
Yeah, and to second on that, again, from a brand perspective, they're investing a lot in blockchain, a lot into innovation, a lot into the whole so-called notion of digital. So if these brands that they control and own the world, and they dictate the kind of consumer demand that is shaping up, invest in these kind of technologies, then you know that they're here to stay. So everybody should feel comfortable that this is the correct course of action that the future is going to shape up with.
So any questions for our panelists? Anybody in the audience have any questions for Mark or Mike? Gaurav. Do we have a mic for Gaurav?
So it's a question as much as for myself as I'm, posing it for you. When you say bad markets are good for investors, can you hear me? Some of the benefits of being the organizer. So when you say bad markets are good for investors, when do you think is the best time to invest? While the market is going down and we are trying to identify who's able to sustain, or just we stand cold and silent and just stay on the fences till the time we see the coherence between the markets going up and people that are still standing? Because that there we might lose the best opportunities. They might not need us because we're living in the public markets, tokens, right? It's a tricky position to be. They can make more money actively selling their treasury tokens than they can ask for us. Where do you see is a sweet point for investors?
Well, I'm biased, because this is what we do, right? So we invest. Okay. So it's not easy to time markets, and when is the bottom, and there's this old adage about trying to catch falling knives. In my view, it's not that. I think it's a good thing. So I said it's a good thing because it clears out the market and lets the sustainable ones keep going. So what we're doing is that we're buying in liquid markets right now, in very strong ecosystems that we know will be surviving for the next 5, 10, 20 years. And we also still support the early stage, which is much more risky, right? Because you're investing in something that they don't have a product yet, they don't have a token yet, it's not listed anywhere. There's a lot of things that can go wrong. So we're balancing out the portfolio now. But not financial advice, but a lot of smart people say it's good to quote unquote dollar cost average and have things you believe in. Don't buy it all at once. Just buy it over the next 12 to 24 months. And I think that'll be a very good strategy over the longer term.
No, averaging is a good answer, and I'm sorry, but if you're trying to save yourself from answering the question precisely, I'll bring you back.
No,
there.
I'm not.
So I'm talking about hardcore straight investments into the project, not buying out from the liquid markets. Like,
but we're doing that. So we are investing.
so we
now.
should invest. I mean, I'm asking it for myself.
I don't think everybody can invest the way we do privately. You need a lot of capacity to be able to source deals and do research. Maybe there'll be a platform out there eventually that will allow for private, smaller investors to participate in that process as well. And maybe you'll hear about one from us in the next month or two. It's possible.
So you're suggesting to the investors that they shouldn't wait for the ultimate bottom or the rise. So let me explain where my question is coming from, if we have time. So Fidelity announced last, I think 3 years ago, that they'll open up the Bitcoin product, investment instrument, for their portfolio, for their clients, when Bitcoin touches 10,000. Now, they didn't do it when Bitcoin was going down. They opened it when it started recovering from 4,000. But the announcement was made before it touched 10,000, right? So I'm sure it is very much like trading, where you put loop orders, right? You know that you want to buy after it touches the bottom, and then, that's when your entry comes. So I know it's tough to mark or time markets, but there's always a claw that you put on the top. And from that point of view, my question came, which is like, should we invest now or should we invest after Bitcoin has, bottom maybe 15,000 and then start investing again?
If I knew when Bitcoin was going to 15,000, then I don't think anybody can really know that, and that's the issue. So you can forecast, you can look at things. The risk is, if we're waiting for that, is that it touches 15,500 and goes straight to 100,000 and you never get in. So that's why I said that probably averaging is the wise decision. Okay, you won't make, so if you're buying from, what is today, 19,000, and put a little in every month and it goes down to 10,000, you'll do the same as if you bought it all at 15,000. And you'll still be in the market if central banks change and start pumping again.
I've got a question as well. Do people always peg cryptocurrencies as a proxy to the Web3? Like, if cryptocurrencies go down, why would Web3 not still be on the rise? Right?
Yes, but the thing that makes Web3 different and sustainable is the incentivization mechanisms made possible by tokens, right? So that this way you can have a protocol company sustain itself and reward the different service providers, with this token. So I think Web3, if you try to separate, okay, this is a Web3 business from the cryptocurrency, it's really hard because you just don't get decentralization, any of that, without the token. So there could be great service providers for Web3 businesses and Web3 companies that will do well whether the market goes up and down, like node providers, for example. You know, they're in demand. They will continue to be in demand because this is growing, whether the price grows or not. But for the larger self-sustainability of crypto, it needs the tokens.
Any questions for Mike before we go? No? So, well, thank you everybody for coming. Thank you, Gaurav, for having us, our partners for hosting us this week. It's been an amazing experience. We all enjoyed being here. So with that, thank you, everyone, and hope to see you in the next one.
Thank you.
And for those of you who know a little bit about Faith Tribe and our relationship with Threedium, stay tuned for a big announcement about our partnership because we are officially working together on a project and there will be some news about us this week.